The S&P 500 could be facing the so-called kiss of death. I'm going to be discussing this with you in today's video, how that is affecting everything that we're seeing in the markets, looking at the dollar rally, of course, which is continuing, and how it's going to affect Bitcoin and Ethereum if it plays out. My name's Lark. I make videos on investing. If you like that topic, make sure to subscribe to the channel, do a thumbs up as well. Let me know if you like this kind of content. Now let's go ahead and get into it. Just real quick before we get into the kiss of death, I just wanted to point out the damn old dollar index, the DXY. It's just keeping on doing its thing, basically. Look here, what is going on today? Yet another new 20-year high for the dollar index, coming up to 114.6 today. This parabolic rally for the dollar just continues, and while we continue to see such an incredible dollar rally, it bodes ill for risk assets. Now, at some point, we'll see the DXY coming back down to retest the 50-day exponential moving average. That could give us a nice little bear market rally when it does happen. We are seeing the RSI getting up here into pretty heavily overbought territory, right? So right now we're actually coming right back up to match the highs from back here on April 28th. So very strong rally we're seeing right now here for the dollar index, which bad for risk assets, bad for stocks, bad for crypto, bad for basically everything except for the dollar, bad for Forex, all that kind of stuff. Now let's talk about the kiss of death theory. So I was watching a video by Alessio Rastani recently, and he got me onto this idea about the kiss of death, which is currently happening. So basically, this takes the 21-month exponential moving average, and what do we see? We see an initial break of it coming down here, followed by a retest of that line, and then a price coming back down and breaking under the initial low point from that breakdown in structure. So basically, it ends up looking a little something like this, right? So we come down here, go back up for our retest, and then we come back down, retesting that initial line here, right? And if we break through that, if we get a lower reading here coming through, then that's kind of what happens. So let's go back and look historically at the last two times this has happened to the S&P 500, and then we're going to talk about why this is important for Bitcoin. So we can go all the way back here to 2001 to take a look at our first major example of this. So we can see the S&P 500 topped out in early 2000. Then in late 2000, we started seeing the big breakdown for it happening. So we came down here to our initial level at 1250. There was an initial breakdown happening. We rallied back up, tried to get over this 21-month exponential moving average. We failed to do so, came back down. And this candle right here, this is what sealed the deal for us because we actually had this lower close coming under. Now we had another rally attempt to try and get back over the 21-month exponential moving average. Again, that also failed basically with none of the candle closes for those months coming above the initial down mark here for this particular market move. So that was the kiss of death right here, right? So that resulted in a decline from peak to trough of 50% during that period. And we can see it actually being around another 38% from the time that this actually came in and happened. Now, if we go to 2008, a similar situation. Once again, market topped out in 2007, October at 1579. We saw the initial sell-off come in all the way back down to 1249. We had a rally back up, failed to close above the 21-month exponential moving average, rejected back down, and we see here where we actually get that new lower low coming in on that chart here. So this is where we break and really seal the deal for this downtrend. Now that particular downtrend, we saw the stock markets bleed 57% from peak to trough, with the majority of that move coming in the months, about 46% of that move, coming in the months after the kiss of death signal flashed. So we can see the majority of the losses come in shortly afterwards. Now in 2008, that was only a few months, right? So The big drop really started in September, and by March of 09, we'd hit the bottom. Markets started to recover. Obviously, it took a long time for recovery to come in, but markets started to recover from March 09, whereas in 2001, we actually saw this whole process taking much longer. So it went from June 2001 all the way down until October 2002 before we found a real market bottom. Basically 2 years of pain for markets. Now, this takes us back to where we are currently, right? So let's have a little peek here. So we have had it happen, right? So we've got come down, we've hit our initial lower level, come back up for a failed retest, right? So we got rejected here at the 21-month exponential moving average. Currently, you get this off here, we have just slightly come down to put in a lower reading here on the charts. So the June lows came in around 36.40 for the S&P 500. Now, in the month of September, we got down to 36.20. Now, I don't think this is statistically significant enough to say definitively that this is what's happening. But let's watch the monthly close. Let's see if we get even more downside price action to finish up the month. We only have a couple of days left to go. But if we, for example, were to bounce here, we could easily see at least another retest of the 21-week exponential moving average, or potentially, of course, a reclaiming of it. A reclaiming of it would be technically a very bullish thing to see, but I'm not sure we are going to get such a move with such overly bearish macro conditions here. But just to let you know that we are looking for basically a confirmation of a monthly close under here, right? So we're kind of just on edge right now. So that monthly close coming down a little bit further would validate the thesis for the kiss of death. Now, how's that going to affect Bitcoin? How is that going to affect Ethereum? Well, we'll be discussing that in a moment. But if you are a trader, you do need to get yourself an account over on Bybit. It's the best exchange for longing and shorting Bitcoin, Ethereum, Matic, Cardano. They got all of the top coins, 0% market maker fees on futures, 0% fees on all spot pairs on the exchange, which is totally insane. And you can get up to $4,450 freaking dollars in deposit bonuses by using that first link down below in the description. Thank you in advance if you use that link for supporting the channel. Now let's take a look at Bitcoin here. Now this is Bitcoin versus the S&P 500, which is why if this death cross idea plays out, and remember Ray Dalio, Michael Burry, and all these guys are calling for a further correction in the stock market, another 25% down, they're saying. Goldman Sachs, another 25% down. Everyone very bearish, everyone expecting lower prices to come in. And here we have Bitcoin tracking so closely, so very, very closely with the S&P 500. Blue line on the chart here, S&P 500, the red and green lines, of course, that's Bitcoin. You can see how tightly we have been tracking with the S&P 500. It's just scary, the correlation we've been having. There's the occasional day or two when maybe we are uncorrelated, but the overall trend, 98% of the time, we are correlating very strongly with what the equity markets are doing. So if the kiss of death theory becomes validated, if all these legendary investors are right, then Bitcoin is going to go down right along with everything else, because we are in the everything bubble right now. We are in a macro everything environment, right? So that is something to keep an eye out for. Now, if we can avoid the worst of it, then, perhaps we'll see Bitcoin finally catching some support somewhere, but this rejection that we just had on the daily is pretty gnarly looking, and we were talking about this exact thing in yesterday's video, right? I was saying, watch out for this to be an area of price rejection. We see the confluence here with this previous price resistance coming with a 50-day exponential moving average. That is an area to watch out for a price resistance, for a rejection, and that rejection on the daily is just, that's gnarly, man. That's gnarly. Look at that. Not pretty at all. We're once again seeing Bitcoin coming down, testing a key area of price support here at $18,500. So we'll see if we get a bounce there. Obviously, a lot of that depending on the macro scene and equity markets. But if we do see further downside, again, we need to be watching here, particularly for $17,600. That is the major area to watch out for here, because even this move down to $18,200, that's actually just a higher low, even though it's not a very significant one, but it is still a higher low on the charts here. But if we actually close below $17,600, that is bad news, bears. That signifies that a lot more downside could be coming here for the market. Remember that we're in a strong downtrend right now, and until we see some significant moves in the opposite direction to counter that, we should expect rallies to be sold off, right? So, and to not be surprised by lower price points that may come in. Ethereum looking rather similar to Bitcoin here, sitting right on a major area of price support at $1,280, so $1,280. Not a whole lot of support in between this and $1,000 for Ethereum. So, you know, still a lot of risk in the market here for Ethereum as well. Also, much like Bitcoin, rejected right at a major area of previous price support, price resistance at $1,400 approximately. So another brutal daily candle showing a lot of sell pressure coming in here for Ethereum. So the major assets, Bitcoin and Ethereum, which make up together, 65% of the entire cryptocurrency market cap, following lockstep with the equity markets right now. Anyway, that's what I got for you for today. Curious to see how this theory around the kiss of death plays out. Will it play out? Of course, the monthly close could give us a good indication of how we might be seeing that moving forward. And obviously the macro is still looking pretty bad. So, yeah, macro, man. I tell you, 2022, the year of the macro. Nothing else matters, just macro. Looking at the Bitcoin and Ethereum charts, might as well start looking at the S&P 500 chart. Gosh darn it. Anyway, let me know what you think about all this down below in the comment section. Thanks so much for watching today's video, and peace out till next time.